Chris, how we doing?
What's up, Spencer? How we doing today?
Did you get your computer all fixed so the hamsters are all fed?
We're all good. We're all good.
Okay.
Ready to roll.
All right, let's roll into some headlines. Let's do it.
All right, guys. So up first, we have one of those charging infrastructure SPACs that we've talked so much about. So ticker CLII. This is the company taking EVgo public. They expanded their relationship with Tesla. So they're going to deploy 400 integrated Tesla connectors to their existing EVgo stations and add 200 connectors for new stations that are planned in 2021. So if you watched the show before, this is something I talked about that sets CLII apart. So they have existing deals in place with General Motors and Nissan to expand their networks, but they also have that charging network already integrated with Tesla connectors. So they're able to capture those Tesla customers. That's something I talked about before. That's something I wrote about before. So no surprise today with that news release out, as they before had said that they were going to expand those connectors to help Tesla customers, but shares were up this morning on that news. And up next, we have Hyliion, so HYLN. Their reported earnings on February 23rd. So I am long shares of HYLN still. The story that I said for this company, it's not about the financials, right? It's about the orders, that backlog, some color on the new comments from Biden, and the new electrification of government fleet vehicles. And then also about that new semi from them, right? So they're not only working on electrifying existing vehicles, but they're working on launching their own electric semi. And that's really the story here. And one thing I said before on the show was that they actually tweeted out not too long ago, big thank you to all our staff that worked around the clock working on this prototype. So to me, prototype means the semi. So could we get some sort of hint of this new vehicle, with that earnings report? I think it's possible. Otherwise, I think it's coming up soon. So keep an eye out for HYLN going into those earnings. And up next, we have Supernova. So current SPAC from Supernova is SPNV. That company announced that they are launching a second SPAC. So what we've come to find out is that a lot of times when these second SPACs or third SPACs get announced, it could mean that the first SPAC is closing in on a deal. Obviously no one has an endless supply of time or money to constantly be doing these SPAC deals. So a lot of times it's about the timing there. So keep an eye out, on Supernova here as we could see a deal announcement soon. And remember that Supernova is Spencer Rascoff, the founder and former CEO of Zillow, also co-founder of Hotwire. So a big name attached to this SPAC. So keep an eye on that one. And then we have movers from yesterday. So 4 deal announcements yesterday. So all of those shares traded up on the day, which is something we haven't seen in a little while, as normally we get a couple that end up trading flat or down because of those built-in premiums and investors not being as excited about the target announcement. So yesterday, CMLF closed the day up 42%, ACIC up 20%, FGNA up 5%, and FRX up 8%. That was the movers from yesterday. And then I want to dive in, before we get to our interview today, I want to dive into one of those deals from yesterday. So I said I would try to provide more information. Again, we had 4 deals announced yesterday, so a lot to cover. So I want FRX. This is a SPAC that I own. I commonly refer to it as the Shaq SPAC, right? Because Shaquille O'Neal is attached to it. But it also includes 3 former executives from Walt Disney, which is the reason why I bought shares, before this deal announcement took place. So they announced that they're acquiring Beachbody and MYX Fitness. So they're going to target that growing demand for at-home and connected fitness, which during the pandemic obviously has seen significant growth, but I think it's going to be here to stay. And, I think I was a little surprised that investors didn't have as much of a positive reaction to this one, as we've seen with some of these deals. So to me, it's all about combining those brands. So they combined Beachbody, which already has over 2 million paid digital subscribers, so 2.6 million subscribers. And then they, have brands like P90X, Insanity, and 21 Day. They're going to combine that with a fitness bike, right? So MyX Fitness, a Peloton rival, where they can now try to cross-sell, right, to their customers. And they can expand on this ecosystem of at-home and connected fitness. That's what I like about this one. They've also been around, for decades. So they have a huge library of content. So the Beachbody brand has over 180 million views annually across that library. They also acquired sports nutrition brand Ladder in 2020. Ladder was founded by LeBron James and Arnold Schwarzenegger. So here you have, connected fitness, Beachbody, sports nutrition, LeBron James, Arnold Schwarzenegger, and MyX Fitness, at-home connected bike that an average of 15 workouts per month from their customers. They also have a plus version that comes with a set of dumbbells, a kettlebell, a resistance band, and 2 mats. So sales were $30 million last year. They see that raising to $100 million this next fiscal year. So, again, it's 3 mega trends across the fitness sector. That macro tailwind of at-home fitness being favored during and after the pandemic. Health and wellness industry is worth $1.5 trillion annually. So $10 billion in annual spending is expected to leave the gym sector, which means it could go to at-home fitness. Online fitness was only $6 billion in 2019. It's expected to grow to $59 billion in 2027. So MyX is the key story here, for this SPAC going forward. We see revenue hitting $1.1 billion in fiscal 2021, $1.5 billion in fiscal 2022, and $3.3 billion in fiscal 2025. And they want to take digital subscribers, from that 2.6 million. They see it growing to 3.7 million in fiscal 2021 and all the way up to 10.9 million by 2025. And I think, again, you have these 3 former Disney executives who have a history with direct-to-consumer. They have a history with acquisitions with Marvel, Pixar, Capital Cities, and ABC. They also worked for ESPN and grew, ESPN into a digital media network. Kevin Meyer, who's going to join the board of directors, he worked at ESPN. He also was the president of TikTok, right? So he knows how to grow social media presence. MyX Fitness is going to be, in my opinion, the next emerging brand. Beachbody is going to, grow that ecosystem with that built-in subscriber base. And you add in Shaquille O'Neal, who's going to promote the heck out of this brand now that, this is his SPAC getting this done. I still own my FRX shares, and, I really like this deal going forward. So that's it for headlines and those deals. Turning to our calendar, we have SPE voting on their merger with ChargePoint. That vote is set for today. I still own my shares of SPE. And then tomorrow we have LGVW voting on their merger with Butterfly Network. LGVW, of course, backed by Bill Gates and Bailey Gifford, and also has been added to the ARK funds with Cathie Wood. So keep an eye out for that LGVW vote. That's it for today, Spencer.
And just real quick on those, Chris, any expectation of any unusual voting, or are these expected to go through?
So SPE, the alert that I have seen is that they expected to go through, but they actually right now have not gotten enough votes. So this was a problem that we saw like with LCA, GNO, was that it passed, but it did not get enough yes votes. So that's important. So guys, if you own shares of SPE, make sure you did vote or you are going to vote, because they need a certain percent to get this deal through. If the deal does not go through, these shares could get cashed in at net asset value, which is $10 and change instead of the, almost $40 it trades at. So definitely important that everyone votes on SPAC deals.
Yeah, that's a good PSA, right? Like
Absolutely.
if you're in
Sometimes
the SPAC,
people, you own the SPACs and
yeah.
you want to hold through that merger, or you sell before the merger. It keeps track of a certain date. Some people may not even own the shares and they're allowed to vote technically. So it's important though that everyone who owns shares goes and votes for the deal, or you have the potential to get your profits here wiped out. So
Yeah, great point. Great point. All right, let's move on to our next segment, our guest segment. I want to bring on today's guest now, Adam Goldstein. He's the co-founder of Archer Aviation. If it sounds familiar, it should. We talked about this literally 24 hours ago. You shouldn't have forgotten by now. They're merging with Atlas Crest Investment, ticker is ACIC. I'm going to bring him on now. Adam, good morning. Welcome to SPAX Attack.
Hey, good morning. Good to be on the show.
Thanks for coming on with us. So let's just start with like the same question we ask everyone that are most companies that come on our show is why go the SPAC route?
Yeah, I think it's a really great question. And if I just take a step back here for a second, just to sort of kind of set the stage. So we are designing and developing electric vertical takeoff and landing aircraft. And these are vehicles that are designed for urban air mobility. And so you get this like big step change in technology when you take these vehicles and you go electric. So I just want to kind of set the stage and help you understand and frame like what's happening here. So there's no actual new like science breakthrough that we're waiting for. There's no regulatory changes that we're waiting for. It's actually a fairly simple story, right? You have these vehicles called helicopters, which everybody knows are very expensive, very loud, and in some cases can be dangerous. They're not as safe as they necessarily could be. And so when you go electric, you get this huge advantage here, where the big advantage is batteries are now dense enough to put these into vehicles, and you can take these motors and rotors and shrink them way down. So electric motors scale down efficiently instead of these big combustion engines that don't scale down efficiently. And when you do that, you have these really redundant vehicles. So a helicopter will have something like 200 to 300 critical parts. That means if any of those parts fail, you can have a catastrophic incident. So that's why helicopters can be dangerous. And so with electric, you get 0 single points of failure in these vehicles, 0. So they're super redundant, super safe vehicles. The second thing happens when you can shrink the rotors and the motors down, you also can change the noise profile. So you're not having that deep whop whop sound like a helicopter generates. That's hugely important. So if you think that the helicopter industry, the vertical takeoff landing industry was to scale, it's really challenging just because they're super loud vehicles. So even if it wasn't expensive, people did want to take them and they were safe, you still can't do it because of noise issues. So now when you go electric, you also get the noise benefit here too. You can do a lot of things to change the shape of those rotors and motors to help make the sound significantly quieter. And then because they're electric, you can also utilize these vehicles really heavily. And so you can bring the cost down to something significant. Now, in order to do all that, big hardware projects, and you're seeing it across kind of a lot of these different hardware companies, it's obviously very capital intensive to do that. And so we think it'll take somewhere between $600 and $700 million to get to market. $600, $700 million to be able to build out this company, get to free cash flow break even. So what a typical startup or venture-backed company would do is they go and they raise 50 million, then 100 million, then 200 million, then 300 million. But this amazing thing happened where the world recognized, wow, it's a really important time right now to be focused on these EV companies, to be focused on decarbonization, and that, wow, the future is moving towards electrification of transport. And so I feel incredibly lucky that the market has recognized that. And so what we were able to do with this SPAC transaction, and directly answering your question, is raise all the capital we need to get to market in one swoop. And that is incredible. It's great for our investors. It allows us to be able to focus on actually building the industry and not just capital raising all the time. So a huge advantage for the EV companies, and I think will help really bring the electrification of transportation, not just in the air, but into all forms of transportation.
Perfect. So I want to back up a little bit too. And I know you're a co-founder, co-CEO of this company. Can you give us a little bit of background on your history in the space and some of the other members of the management team?
Yeah, absolutely. So my business partner and I, Brett, have been working together for a long time, over 10 years. We're best friends. We're business partners. We vacation together. We're basically family at this point. And so Brett and I have built, I don't know, maybe a dozen companies together, mostly in the software space. And so we're entrepreneurs and problem solvers. We like going out and tackling really big problems. Our last business was a software company based in New York. It was called Bettery. Awesome mission-driven company. We scaled up hundreds of people and ultimately sold that company to a large European company. And then after that, we immediately started building airplanes together. And so we had this big view, this big vision on electrification of transport. Brett and I are very big Elon Musk enthusiasts. We believe in what he's doing is really helpful in pushing the world towards this sustainable form of transportation. So we're investors in Tesla. We're investors in SpaceX. We love the whole industry. And so one of the things we did was we went down to the University of Florida, where both of us went to school, and we donated a bunch of money to the school. And we built an eVTOL lab, so an electric vertical takeoff and landing lab, where it was used to be studied the space. And I think it was really important that we help do our part in pushing these, in pushing this industry, as quickly as possible. At the same time, we've been following. There was a group that started the industry about 10 years ago. So Larry Page basically invents the industry 10 years ago with a company that was originally called Zee.Aero. You might know it now called Wisk. Wisk is the name that they took after they did the big joint venture with Boeing. So Larry Page spent, I don't know, it's not publicly disclosed, I'm guessing maybe something like $1 billion of capital over 10 years, building 5 full-scale aircraft and dozens of those aircraft. The latest one is called Cora. That's the one you can see on the Wisk.Aero website. Incredible group with incredible technology. Now, a lot of the folks from Archer came from Wisk. So Tom Muniz, our head of engineering, ran engineering at Wisk. Jeff Bauer was an early employee at Wisk as well, but he left around 5 years ago or so to go run Airbus's program called Airbus Vahana. And so he was the chief engineer there. So Jeff and Tom came back together. And then when those guys came together, it was this huge moment in eVTOL industry. The two leaders of two of the biggest projects out there, Wisk and Airbus, got together to come, and a lot of engineers followed them, and a lot of engineers wanted to come over and work with them again. These are two of the most technically competent people, the longest standing people that have been working on this industry. And so this is the 6th aircraft that they're building, 6th full-scale aircraft. So it's not a question to us of whether the technology works. You can literally just go to a Wisk website, or go on YouTube and type in Airbus Vahana, or same thing with Joby. You can see these vehicles work. And so now you're at the point where you need to get to certification. And so what Archer did was Archer designed a vehicle that was designed from day one alongside the regulators. We said, okay, let's build a vehicle that can get the performance needed for urban air mobility, which we think is 60 miles at the end of battery life, which also includes reserves. How do you build that vehicle as simple as possible so it can get certified and also be mass manufactured? And then we said, okay, great. Now we have the design that makes sense. This is the design that Tom and Jeff think is the winning design in the industry. We went and said, okay, we're going to need to think about mass manufacturing, right? From the very beginning. We don't want to just build 100 of these vehicles. We want to think long-term, 20, 30, 50 years. How do you build lots of these vehicles? And so we partnered with Stellantis. Stellantis is the merger between Fiat Chrysler and Peugeot. And so they have been working on mass manufacturing for obviously a very long time. They have the competencies in robotic automation and thinking through how do you take something from a concept all the way through production. And then the second stage of what we did is we said, okay, what about on the certification, operations, maintenance side, like the real business side of things? Who would be the absolute best partner who also really cares about decarbonization? And that was United Airlines. And so we had this really culmination of two groups that wants to bring this industry to market as quickly as possible. They can reduce our timeline. They provide financial support. They help also provide a lot of, I think, really consumer confidence, right? Because we'll need consumer adoption. And so, again, all we're really doing here is seeing this replacement cycle of helicopters happen to way safer, way cheaper, way quieter vehicles. And then the TAM will expand. The total addressable market will expand. And the reason why it will expand, so like I'll ask you, Chris, when's the last time you've taken a helicopter?
A long time ago.
You'll tell me once or never. That's what everyone says, right? And so everyone says, yeah, one time, or I don't know, a long time ago.
One time.
So exactly, it's very, very common. Or everyone says, yeah, on my honeymoon in Hawaii or something like that. So if it was $50 to go from Manhattan to JFK, right, instead of sitting 90 minutes in traffic, and it was safe, would you consider that? And I think the answer to most people is, of course, if I can fly to the airport in 5 minutes instead of sit in traffic for 90 minutes, yeah, that sounds interesting. So if you replace helicopters, right? Which is there's 10 to 15,000 in the US or something like 40,000 worldwide. That's think about 40,000 times $5 million, huge market. You got to replace all those with these new, safer, quieter, cheaper vehicles. And then guys like you, Chris, that's what we're saying. Hey, here's a vehicle that, may have a large airline brand on the side of it that makes you feel comfortable, that has been certified by the FAA, by the way, certified at the same level of a commercial airliner, which is 10 to the -9, which means there won't be an incident 1 in a billion flight hours. And would you take it? And I think my guess is you will, and the market will expand. Now, one last comment here, timeline. So if you look at the numbers we put out there, a lot of people step back and say, when are there going to be thousands of these vehicles flying overhead? That's really scary. Well, if you look at the numbers we put out there, our 2026 number from vehicle production is 500 vehicles. It's not that crazy. Yes, it's about $2 billion in revenue. And if you look at our later half of the decade numbers, you'll see we get up to, 800, 1,000 vehicles. Those are the types of numbers that aerospace companies build all the time right now. This is not crazy. We have to first go through and replace all the helicopters in the United States and in the world, and then expand the TAM, expand the total addressable market to new folks. And so I think it really will bring in folks, but you're not going to see thousands of vehicles flying overhead like in this decade. That's not going to happen. But that could happen, 2030, 2040, 2050. And that's where we're all working towards. But you can still build huge businesses all along the way. $10 billion run rate businesses, in this decade along the way, just by taking out fractions or, double-digit percentages out of the helicopter market.
Adam, I got to say, as you respond to some of these questions, you knock out more and more of the questions I have with some of these answers. So, great responses here, getting a lot of information. So I know you talked about being built with that FAA certification in mind from the start. That was a big highlight for me from the presentation. I guess I would ask then, with that aside, what are the biggest hurdles standing in Archer's way right now? Yeah,
good question. So historically, if you would have asked me that, my answer would have been capital. How are we going to raise $1 billion of capital? Man, that's hard. That's a slog. That's a lot of stuff. Now, with the focus of the world on EVs, that risk is taken off the table. And so the new kind of focus moves to two things. It's always really been around certification and manufacturing, but now it's 2 instead of 3, meaning capital is no longer. Now it's cert and manufacturing. So the vehicle's design day one with cert in mind. I think there's a really awesome video, Chris. I'll send it to you after the show. There's a very senior person at the FAA named Jay Merkel, and he gets on C-SPAN 3. I'm not sure if you watched C-SPAN 3, Chris. Maybe you missed it. But Jay Merkel got on, it was about 6 months ago, and he said, number one question I get asked, is this real? Is this happening? And he says, yes, this is more than just promotional marketing videos. We have at least 6 companies that are 6 vehicles that are well along their way in type certification. This is not just something that we're just talking about. We are working on the operations. We are working on how to integrate these vehicles into the airspace. And so the FAA is very far along in doing this. This is not like some surprise, there's vehicles. We're literally like shouting at rooftops, it's happening, guys, it's happening, right? And it's just more of like understanding when these vehicles will get the adoption as soon as we get through certification. Now, the next big challenge is mass manufacturing, right? So if you look at today, Boeing, for example, will produce something like 1,000 vehicles. And you go down kind of to the smaller, companies, the smaller aircraft companies like a Piper or a Cessna or like a Cirrus Vision Jet, right? They're producing hundreds of vehicles. So we know that's possible. We know we can do that. Now, the question is, how do we build 5,000, 10,000, 20,000 vehicles per year? Now, if you look at our financial estimates in our deck, you can see we do not project we are going to be doing that 10,000, 20,000, 50,000 in our financial numbers. But we're certainly working on it. We're certainly trying to figure out how to do mass manufacturing. That is a really big one. And we haven't really mass manufactured aircraft since World War II. And so I don't think that it's not possible to do it. I think there hasn't been demand for it before to do it. And that's why it hasn't happened. But now with electric, you have these vehicles that are safe, quiet, and less expensive. I think the demand is going to be huge. So now it's turning that back on. So, it's not like we're out there saying we're going to produce 500,000 vehicles. What took Tesla 18 years to do, we're going to do it in 3, like some of these EV companies are doing. We're not doing that. We're saying we're going to produce 500 vehicles by 2026. That is a feat that I think is possible. So manufacturing First, we'll call at the traditional aerospace level is what we're focused on today, while at the same time in parallel, working with a group like Stellantis to think about mass manufacturing. How do we set up a factory to be able to produce 5,000, 10,000, 20,000? That's the focus. That's a big challenge. That's what takes us to build this next $1 trillion industry, $3 trillion industry, as Morgan Stanley states. So one last comment here too. It is my view that very few companies will reach escape velocity, right? You need to raise a lot of capital. There's a lot of technical expertise. And then ultimately you have to execute on building these vehicles. So our team, which has the deepest technical knowledge out of any other group in the industry, I think has the ability to get there. I'm not sure that's true for a lot of the new companies that will come on, but I feel very confident we will reach that escape velocity and get there. We have the capital, we've got the team, we've got the partners, and now it's up to us to execute.
Perfect. So the other big news that dropped yesterday, along with the SPAC merger announcement, was the partnership with United. So United invested in the PIPE. They also committed to buying $1 billion worth of aircraft from Archer and a possible order of 500 million additional. Can you talk a little bit about United, that partnership, and how this agreement came to be and what the timeline of that looks like?
Yeah, absolutely. So last year, United Airlines made a pledge to make a significant impact on the environment they want to embrace emerging technologies. And so the company recognizes the positive impact that urban air mobility can have on the environment. And so that vision that Scott Kirby at United has aligns perfectly with the vision that Archer has. And so United ordered aircraft, but it wasn't just an order, it was a partnership. And so this partnership was really designed around how do we help bring this future to a reality as quick as possible. And so we are aligned in that they're helping us get to market. They're helping us with things like certification. They're helping us with things like maintenance and operations. Think about it, right? So we're not just an R&D shop building cool technology. We have to think about things like, how do you maintenance a battery on a plane, right? Guess who's done that before? 787s, 737s, they have lithium-ion batteries today on vehicles. They've been maintaining those vehicles for a long time. They have very good clarity in terms of how to operate vehicles in the airspace, on the ground, and how to attract customers and how to do all this safely. And so it's a huge partnership for us in terms of thinking about getting to market quickly. I think it's also a big boost of confidence to early adopters of the product, to the mass adopters of the product eventually, that, hey, United Airlines thinks Archer is the company that can build safe vehicles that can get to market the quickest, that'll be certified first. That may be a vehicle that I want to get onto. And so, Chris, I'm hopeful that when these vehicles are offered at $50 and we can take you from JFK to Manhattan, you'll be one of the first ones online there. And hopefully partnerships like United and future ones that we'll work on will attract you to taking these vehicles. And you won't just say, yeah, I did it once a long time ago, I don't really remember. You'll say, oh yeah, I did it last week. Oh yeah, I was in Manhattan and I wanted to go out to Connecticut and go to Colony Pizza. And because I love that place, it's great. And then come right back. And by the way, I can do that on Tuesday and still get home and see the kids, no problem. And it costs me the same as an Uber. That's a pretty cool thing. That's the future I want to live in.
Yeah, definitely. You let me know. Yeah, I will be more than happy to come share a ride in one of these great vehicles that you have coming. One of the questions we got in the chat was on that United deal. So the question is, are those orders or is this just a pending deal going forward?
Yeah, so it's a great question. So we've signed a definitive agreement. It's a purchase order, but we obviously have to deliver aircraft that have certain performance capabilities. So like, for example, if we delivered an aircraft that only went 5 miles, it doesn't have a lot of use to them. And so United went out and diligenced the whole industry. They looked at everybody. There's a bunch of wingless groups out there. So folks that are building wingless planes, there are folks that are building different types of vehicles. And what was really important to them was we have to pick the winner, right? And so we can't pick the number 2, number 3. We can't get this wrong, right? We need to bring the decarbonization effort to the air as fast as possible. It's a big part of Scott Kirby's mission. And so it was important that we had that. And so we said, let's structure the contract to make sure that you feel comfortable that we'll do that. And so we put in there the ability, for us to have to meet certain performance metrics. Now, this is the 6th plane that our team has built. And so if you look back at history from Tom Muniz and Jeff Bauer, the chief engineer and our head of and our VP of engineering, we feel highly confident we can deliver that. That's something we're very willing, to take a bet on. And so, there's other things that we need to think through as partners, right? So United made also, an investment in the company. And when doing that too, we talked about things like, geography, right? So we're going to deliver planes to you, and Archer wants to operate planes too. We're going to do that together. So how do we think about like kind of carving up, the world, right? So again, it's only 200 planes. We're not talking about, think about that in context of helicopters or 10, 15,000 helicopters, like just in the US, right? So it's a small percentage of the world that or of the country that we're talking about, but we want to operate, we think can launch a business and be more productive together than separate. And so our thought was, okay, there's a bunch of details like that, geographic restrictions that will work out as partners along the way.
Perfect. So I know we've got more questions flying in the chat. I want to get through a couple more I have here, but the chat is going crazy right now for Archer. They love you, Adam. They want to know more and more about this company. So let's try to fly through some more questions. So, you talk about that kind of Uber for Air model as one of the 2 business segments. My question is, so if I want to book an Uber, I go on the app, I, pick the city I want to go to, the place and everything. Is that something Archer will control? Will you have the technology and the infrastructure for the ride share, or will you look to partner with a company on that?
Yeah, that's a really great question. So Archer will definitely build the consumer facing experience, right? My background is in software too. I'm excited for that part of the business. I think we can do a great job creating an awesome brand that attracts really great, folks to the platform. I do think there is also the ability to partner with other great folks. So meaning like take an Uber or a Lyft or some of these other rideshare or multimodal kind of groups. They want, it's part of the chain. So if you think about, if you're going to book a ride, if you're going to book a flight to go from, let's say, JFK to LAX, right? And so you think about that full trip. Right. So what you'll likely do is you'll book that trip, but then there's also 2 other legs of that trip, which is, taking your, as an example, Waymo, you're taking your Waymo, taxi to the vertiport. You're taking the Archer aircraft from the vertiport to JFK, and then you take, the United, plane from United to LAX. Right. So if you think about like the multimodal group, I think there's a lot of groups that have already like reached out and indicated they wanted to work with us. So Waymo is a really interesting one that, I bring that up simply because Waymo has a really deep relationship with Stellantis. And so, that would be a group that we would be really interested to work with as a multimodal partner. They're one of the leaders in autonomy out there. And so I think that's like a good, hopefully user journey that you can understand moving from, booking the entire trip all through one app, by the way. So if you think about like, how do we sort of piece all that together? We're working with different groups right now to try to, solve those issues. But I do think that will start with the Archer consumer experience.
Perfect. So that rideshare business, looking at, dense cities first, you mentioned New York City. How many cities are we looking at to start? And how many of these, highly populated cities do you see in the future in Archer?
Yeah, so we use New York as an example because a lot of people have taken that, New York to, JFK to Manhattan taxi, which is, I think like it's a killer, right? It's only 17 miles and takes you 90 minutes. I lived in New York for 20 years. I've missed flights planning for 90 minutes to go 17 miles. That's a good example, but New York is very real estate constrained. So it's not likely the first city that we'd launch into, although it is a very big helicopter city. If you look at cities like LA, Miami, Orlando, Dallas, those cities are very pro urban air mobility. They want this technology to happen. Those cities want to be technology leaders. They also have a decent amount of existing infrastructure. So take LA, over 200 helipads, 12 underutilized airports, and then you can also build retrofitted, parking structures into landing areas, right? So these vehicles weigh 6,000 pounds and they create minimal downwash, which means the air being blown down when these vehicles take off and land. It won't damage the infrastructure. And so you can actually put these vertiports in a lot of different places, but LA would be a really good typical city. We've been talking to the city, and then several other these cities too. We will likely start with some of these core cities. It's obviously easier, to start in a city like LA that has great weather all year round. But the vehicles are certainly built for all weather capabilities. This is a global thing though. This isn't just a thing that will, happen in, just a few cities. This is a concept that really will be everywhere. A lot of the investors in our PIPE process are global investors, strategic global investors that have interests in bringing these capabilities to their countries. And so this is a movement, to take mankind and move them into the air. This is not just about reducing traffic from JFK to Manhattan. That's the good obvious example. But what about living in in LA and going out to Palm Springs, for lunch, or probably to start, I'll call it Riverside, right? Something that's a little bit closer. It's a little further of a trip. Probably in 5 years, batteries will be good enough to do the full LA to Palm Springs trip. But how about being in LA and just going to Malibu for dinner and back and not fighting traffic, right? Or just, I live in the Bay Area and I want to go, we do a lot of biking here. I want to go out to the Santa Cruz Mountains. Instead of, going out there, how about just flying out there, right? It's really about reconnecting, with the earth, with these trips that would typically be, saved for vacations or holidays or weekends. You can now do them on an everyday basis, right? That's what makes us like super excited long-term, the vision here around this. People are just stuck in traffic and they don't want to be. It's not that when transportation has improved, it's not that people necessarily traveled longer. It's that they just traveled further. There's only so much tolerance people will like sit in a car for. This allows you to really start expanding and really kind of getting back out there, which is what makes us so exciting. And by the way, it's just why we think the market will ultimately be so big for this.
Perfect. So I'll say, as you were talking about cities, the chat was letting us know what they want you to come to, because I think everyone wants you to come to, the cities that they live in so they can get a ride on this. So lots of excitement. I have one more question before we get to chat questions again. The chat is going crazy and just wants to know everything about Archer. What's the timeline on the prototype? I see in the presentation 2021. I know you can't give me a date, any sort of hint of what quarter or when we could get the unveiling of this vehicle.
Yeah, absolutely. And it's not a secret, by the way. So the vehicle is in its final assembly in our lab right now. So, we could gladly have you over and come see the vehicle. We will do the unveiling as soon as the transaction is complete and we are able to do marketing again. So that's targeted in May, where we'll go out there and we will hold a big media event, a Tesla Cybertruck style event. We actually hired the person that runs that ran the Tesla Cybertruck event. We thought that event was awesome, really, really cool. We want to do a big event and have people come sit in the vehicle, see the vehicle. And then, afterwards, ultimately, we'll do all the flight tests for everyone to see. We are going to be a very transparent company. We have a lot of confidence in our technology. We're going to show it off to everyone. We are not, our belief is that our lead in the industry will be determined by our pace of innovation, right? And so we're not the group that's trying to necessarily like block everybody out by patenting every single little thing. What wins is the pace of innovation, right? It's why Tesla has done so well. It's why Elon keeps winning. He just keeps innovating. That he unveils one product and that we all go crazy over, but that product has been in the works for years. There's another product that's already been in the works now that we're going to be blown away with, years from now. That's our view of this, right? So we want to show off the products that we have. We're very confident in the technology. And so we will show that off here as soon as this transaction is closed. We will put it out there publicly.
Awesome. So I'm going to turn it back to Spencer. It looks like we've got lots of chat questions to get to.
Yeah.
So let's try to knock as many of those down as we can before we let you go, Adam.
Yeah, quickly, because we've had Adam on for a half hour, and this is great, but I don't want to take up too much of his time. All right. Well, let's start with this. Do you plan to get a lot of questions about first responders? Do you plan to sell these vehicles to first responders?
Yeah, that's a really important one. And so the answer to that is yes. So, the DoD is actually a really interesting group, and I think an important one in the development of this technology, not for kinetic use cases, for non-kinetic use cases, meaning for, think about things like golden hour vehicles, vehicles that can be built that can help, you know, save a soldier's life. If you get something like a dramatic increase in odds that you can save a soldier's life, if you can remove them from harm's way within an hour. Really important use case. Things like rescue vehicles, right? Really important vehicles. So, you know, if you look at a lot of helicopters, I live, you know, near like the Stanford, you know, hospital, and I hear the helicopters flying over, right? First of all, with these vehicles, you wouldn't hear them. It wouldn't be disruptive, but every hospital that has a helicopter, certainly this would be a great use case for them. And so I think emergency services is a really great use case for it. Something we're definitely very excited about. And so, you know, my guess is that the DoD will actually help facilitate that. And in the sense that the DoD wants the next great aerospace company to be built right here in America. And they're being very helpful, really helpful. They're providing, you know, guidance, flight test, kind of whatever resources they can to help not just Archer, the whole community, which I think is really important. And so it's really geared around that. So if you think about, you know, some of these bigger helicopters, you know, a bigger helicopter can cost you on upwards of $5,000 to $10,000 per hour to operate, right? So super expensive. These vehicles, electric vehicles, will certainly not cost that. And so I think there's a big use case here. Emergency services, disaster relief, golden hour vehicles, even supply chain logistics. So we've talked to some groups about things like dropping in like firefighting equipment, like bringing things like that quickly to folks, where again, helicopters, very expensive, hard to maintain. What if you had a fleet of these vehicles that could bring equipment like that to disasters really fast, right? It's now much more affordable to do that. It's not like a helicopter is reserved for the rich anymore. This is now can be available to the masses as these vehicles are just much less expensive.
Yep. And then also a bunch of questions about safety, as I'm sure you would expect. So one question: how many of the 12 motors can fail and still allow for a safe landing?
So we can lose 2 of our rotors. So how about this? There's 12 rotors, 6 on the leading edge, 6 on the trailing edge. Okay. We have 6 independent battery packs. Where we can lose 2 for sure. 2 rotors can go for sure. And then different combinations we can also lose where the vehicle can fly safely. So based on those combinations, you know, you can lose 3, you know, rotors, potentially even 4. And so the vehicle is also, you know, built with a big wing. It is designed to glide down and land, you know, conventionally. So you do get the benefits there. Like a helicopter just has to try to auto rotate, right? And so they can't glide down. And so, you know, we have 0 critical parts in these aircraft. So if you lost, so think about this, 6 independent battery packs, 12 rotors. Let's say you had a bird strike, we lost a rotor, the passengers wouldn't even know. Like it would fly totally. Let's say flock of birds, you lost multiple rotors, right? Which, by the way, the propellers are designed for bird strike, right? So the odds of you losing them are still pretty low. And so, but let's say it did happen, right? You can lose multiple rotors. You can lose battery pack, because they're independent battery packs. And then worst case, you can always glide. Now, we don't get benefit in the certification process that you can glide from the wing. So you still have that doesn't go into the one, you know, certified to 1 in a billion, you know, that 10 to the -9 level. But just to give you a sense, you know, think about like a helicopter, which just has these hundreds of critical parts.
And then the last one here is really like, who is flying these and what are the requirements, the certifications that you need to operate one of these vehicles?
Yeah, so we'll certify under typical airplane, you know, type certification levels, but the vehicles will be flown by pilots. But this is actually an interesting conversation here. So it's one of the reasons that United actually was very interested. So United wants to help increase their funnel for new pilots. They also want to add diversity to the pilots that they bring in too. Right now, the main source of pilots is the military, right? And you kind of get what you get. You can't really influence the funnel. And so this is actually an attractive new area for them, an attractive new, you know, airplane that will be able to attract new pilots to the industry. For one, you can sleep in your own bed at night. You're not taking a plane, flying, you know, and 4 days a week you're on the road, right? These are local vehicles, so we'll be able to do that. They will be fairly simple vehicles to fly, and they will be vehicles that will also, the hours that you get flying these vehicles will count towards the hours that you need to fly the larger aircraft, where you can make, you know, more money as a pilot as your career progresses. So there's actually really nice synergies here for the airlines to operate these vehicles as it relates to tactical issues that they're trying to solve too. It's not just about, you know, there obviously is the large area of of urban air mobility, huge new sector. You also get decarbonization. You also get tactical things like defrictionizing travel for United's passengers. And then you also get some of these other tactical things like solving their pilot issues, right? So really multiple layered benefits, but it is not going to require some crazy special thing that no one has to do. It's actually a fairly simple airplane to fly that I think people would enjoy flying. And so we're excited about that.
Adam Goldstein has been on with us. He's the co-founder of Archer. They're merging with Atlas Crest. The ticker is ACIC. Adam, you gave some extremely detailed answers. Thanks so much for the time. We kept you a very long time, but it was well worth it. Thank you very much. We appreciate it. We'll be in touch. We're going to keep following the story, and we'll have you on again.
Thank you so much.
Adam. Look forward to checking out that vehicle from you.
Absolutely. All right. Thanks, guys. Appreciate it.
Thanks a lot. All right, Chris, I'm going to defer to you. You can be ahead of me in line. How about that? Okay. I've never flown a helicopter before, so I'll let you do that, and then I'll do that after you. How about that?
Absolutely. I think this is a real exciting field.
Yeah.
There's several players in this market, including a couple SPACs now, but I'm excited, and I think it could be the future of getting people point A to point B in some of these high densely populated cities. So Spencer, before we get to ticker time, I just have a couple housekeeping items here.
Sure.
So I want to give a plug to our upcoming boot camp. This is going to be a Saturday boot camp, and we'll be covering SPACs and options at this boot camp. So myself and Mitch will both be attending the boot camp. We'll be leading a couple panels. And anyone who's watched the show before, we have a couple guests from prior episodes joining us. So we have Julian Klimachko from Accelerate Funds, of course, that runs a SPAC ETF in Canada, joining us for a panel talking, units, common stock, and warrants. And then we have Niccolo De Masi from DMY Technology, the company that took Rush Street Interactive public, is working on Genius Sports and has a third SPAC out as well. So I dropped that link in the chat. Be sure to sign up. And then also reminder, smash the like. We had over 1,000 people watching this exclusive interview here. Again, we bring you the CEOs. We ask the questions from the chat. The show's all about you guys. And then before we get to ticker time, I want to do an update. I dropped the ball yesterday, but today I have information on that SPAC that stumped Chrisopedia. So NHIC was the ticker was brought up. This is New Hold Investment Corporation. So they raised over $170 million. They're targeting a company around $500 million in what they call Industry 4.0. So some sectors that they list are robotics, precision manufacturing, and the smart city / smart home growing industry. So the SPAC is led by Kevin Charlton. He was part of Hennessy Capital, which has done several SPAC deals, including bringing Bluebird electric bus company public, and Daseki. He also worked at JP Morgan before, and he has a bachelor's and master's degrees in aerospace and engineering. So the more I look at this one and did my research now to answer that question from the chat, I like this one. I like their target area. I like that man that's done several deals. So that's what I've got for Stump Chris on SPACs Attack. So
yeah, that was great, Chris. Also, public service announcement. I don't know if we mentioned this enough on our show, but we have a newsletter. Well, we have a lot of newsletters, but we have a SPACs newsletter. If you want Chrisopedia in your inbox every single day, there is the link. I just posted it in the chats and across all the platforms. The SPAC in 5 newsletter goes out daily, I believe. Yeah, pretty sure it's daily. And it's basically Chris if you don't get enough Chris in your life, you can have Chris in your email as well. All right, let's do some ticker time. Actually, before we get to this, Chris, there was a question earlier from before the interview that I wanted to address. We were talking about voting and why that's important. How do you vote? Let's say you own a SPAC. How do you vote?
So whatever broker you use, when you sign up, you provide an email address. So I typically get my vote requests by email. Sometimes you will also get them in the traditional, mail to your house. But the easiest way is whichever email address you use with your broker, check that email, and you should have the link to go vote on those shares.
All right, I'm pasting again the newsletter link. Didn't go through for there we go. Okay. Ticker time. Let's do GXGX. Gosh. Know that one. GX acquisition. Do you know it, Chris?
I do. So this is Cellularity is the acquisition target. This is a bio one, which again, bio is just not my wheelhouse. Maybe that's something to ask on Biotech Buzz, our 2:30 show here on Benzinga. For me, yeah, biotech, I'm not an expert, so I don't like giving answers when I don't know them.
Okay. We appreciate your honesty, Chris. Thank you very much. Taca, TACA. You know that one?
Yeah, so Trapont acquisition, technology, former CEO of Vodafone. That's about all I know about this one. It hasn't gotten a lot of buzz or a lot of attention. It does look like it's trading in that sweet spot though. So definitely one worth keeping an eye on. Trading at 1032 right now because it's got low risk and potential high upside.
Ajay is asking about EXPC versus ACIC. I guess. Oh, that's a stock. That's an actual. So I guess they're a competitor to ACIC. I don't know if Chris has any thoughts on that. I'm not sure if he would. Sorry. Let's go back to the SPACs here. What about Do you know PUCK? Do you know PUCK?
So PUCK is a brand new one. I believe actually today those shares could price. So this is another sports one. We're going to do a sports show soon where we talk about all these SPACs, kind of covering the sports industry or having former athletes attached to the management team. So that's one I was saving for that show.
Okay.
But it's got a couple people with experience in media and sports. So my guess is they go after, a sports media company.
All right. Yohan is asking about NSTB. I guess the split with the units happened today.
Yeah, so NSTB, that's another Northern Star acquisition SPAC. This is Jonathan Ledecky and Joanna Coles. Targeting, beauty, wellness, e-commerce. That's the same team that did the BarkBox acquisition with STIC, which I own shares in. I love this management team. I think the fact that it's splitting and you can now buy common shares and warrants, I wouldn't be surprised if this one starts trading at a higher premium because of that management team. Remember, guys, you can't buy units on all these brokers. So like your Robinhoods, your Webull, some of these retail traders don't have access to these SPACs until they split. So that's always a catalyst, especially with a strong management team, that these SPACs could now see strong interest and also get, a premium built in here.
Yeah. Also, I apologize if I butcher anyone's name ever because names are hard. Okay. Let's do a couple more here. I just had one. AACQ. You know that one?
Yeah, AACQ. I think we talked about on our crypto SPAC show. The former CEO of WorldPay. He's been a fan of crypto, and it looks like maybe they go after someone in that industry. So no surprise that this one has started trading higher recently with the interest in cryptocurrency and Bitcoin.
All right. I think that's a good place for us to wrap it up, Chris. Do you have any final thoughts for us? Mitch is going to be back tomorrow. That's my understanding. He was moving this week, and I think he just got internet today. So Mitch will be back in the driver's seat tomorrow with Chris. But Chris, it's been a lot of fun stepping in and hanging out with you for an hour this week. And do you have any final SPAC thoughts for us today?
No final SPAC thoughts, but I'd echo that statement, Spencer. It's been great having you on the show. I'm happy we could keep doing it, even with Mitch out. I'm obviously looking forward to having him back, but that's no offense to you.
As am I. None taken. None.
You have been great on the show, and guys, everyone in the chat, how much have we taught Spencer about SPACs this week?
You taught me so much.
He's even remembering some of these tickers thanks to Benzinga Pro, and thanks to you guys asking them. So great job, Spencer.